Hello, Mavericks and everyone. Nice to be here. This is the Currency Room. I'm joined by Mr. Ankit Sharma. My name is Rob Reinhold, and this is the last Currency Room for this entire year of 2022. Ankit, what do you think about that?
I feel like this was a long year. So much has happened. But I must say, it feels like it kind of flew by. What a year. We'll talk more about this in our when we look at the year-end review class. But what a year.
Well, I'm very happy. 2022 was the best Forex trading year in a decade. I can't remember a year this good since like 2012, 2013 when the Eurozone was falling apart. So the volatility has been amazing. The moves and trends have been amazing. And because of the holidays, how they fall this year, this will be the last currency room for the rest of the year. And we'll pick up in January. We'll still have all of our other regular sessions during the midweek and end of days, but this is going to be the last currency room. Last week, holy cow, what a week. And really to top this year off, this week, absolutely crazy. And I'm going to go just straight to the calendar because we usually have like 3 or 4 red rated news reports coming out. Look at this calendar. 4 central banks. 4 central banks. So we heard from the FOMC, we heard from the S&P, the Bank of England, and the ECB. Absolutely crazy. So on top of all this, we got a pullback. So after the FOMC came out, it was more hawkish than people expected. However, before the FOMC, we got this great CPI report. The CPI report was fantastic. Headline was supposed to come in at 0.3, came in at 0.1. Everything looked really great, and the market gapped up 3% on that news. By the end of the day, it had gone negative. That was a really nasty day. And then we got the FOMC, and they came out, and they raised rates by 50 basis points as expected, but they were more hawkish than the market was expecting. So we did get a big pullback in equities, and we broke down below the bottom of the range. We'll be taking a look at charts here. Yields went down. Dollar was up slightly, but I want to point this out. In any other week, let's go 3 months ago, the dollar would have been up 2 to 3%. The fact that it was barely up this week, it tells me the trade is broken. Again, we'll take a look at all these charts. And crypto does not like risk-off moves, and that's what we got. Was a risk-off move. There's too many news reports for us to go through them individually, but I really want to point out the one I thought was the real killer. If you take a look on Thursday, the U.S. reported retail sales that were much weaker than expected, and Empire State Manufacturing Index, which is much weaker than expected. This is where the Fed is caught right now, and this is where the market is caught. The market was thinking, okay, inflation's going to come down, the Fed's going to back off, and we're not going to go into a deep recession. This is what they were slapped with today. Inflation's coming down, but the economic numbers are falling apart, and the Fed seems like they are determined to keep pressing the brake. And the market's like, hey, look at these economic numbers. Inflation's down for a reason. Look at these economic numbers. And the Fed is saying, nope, we're going to go harder. The market did not like that whatsoever. And you'll see that this week we had a pretty big pullback. And remember, at one point we were up like 3 or 4% on the week. And we ended down over 2%. These numbers are taken about an hour before the market closed. With the volatility, we might get very different numbers. So understand these are taken a little bit before the market closes here. Equities down about 2%. Crypto down about 6% across the board. Oil did have a little bit of a bounce, but it sold off on Friday. There was really nothing good to say about this market. Over the last 2 weeks, we've been talking about this upper trend line, the 200 period moving average, being very, very, very major resistance. And then we had this support level down here, right around 39.50. And we said, look, the market, we don't know where we are here. We're trapped between moving averages. If we break up, then the market probably has more upside. And if we break down, the market has more downside. And we didn't know which one was going to happen. But what I said last week, I said, by the end of this week, we will know which one it is. And here we are. At the end of the week, it is crystal clear. that this market, technically speaking, is going lower. Now, I want to bring up this point because I've been more bullish than bearish, and Ankit's been more bearish than bullish. And in this instance, the market breaks down, I could still remain like I'm feeling bullish. Like, hey, I feel like the market's not that bad. I don't feel like the economy's that bad. I don't feel, guess what? Those are all my opinions based on a bunch of other things. If I throw those away, the chart says lower. Now, Ankit, you've been more bearish than bullish. What do you think about this break?
Hey, well, I would definitely say that this price action this week has definitely given me a little bit more assurance that the market actually wants to go lower. I think it's all about the timing for it. The biggest question that we had, and I think that's where we were last week, is if we get this end of the year rally. So I think at this point, I don't see a reason for market to rally. We might just slowly drift lower, but I think based on where we are, again, giving up moving averages at this point, I mean, I wouldn't be surprised we kind of go back and test the October lows. So the question now really is about the timing. I think the direction is a little bit more clear. I think now the question is really about timing as we go towards the end of this year. 2 more weeks, before we really get back into the New Year's. So I think the next couple of years next couple of weeks will be interesting. But yeah, I'm definitely more clear on the direction as we were last week.
And let's take this chart because I think you're exactly right, Ankit. It's just a matter of time. If we go back to the March high, if we go from high to low, this was 3.5 months. 3.5 months and some pretty big down. We had one little bounce in there that was significant, but that was it. 3.5 months. When we topped out in the middle of August, we went down to October. Now again, this was 2 months. This was 2 months. So if we take a look at where we are now, if we say this was the top, December 1st, I think we can say that we're looking at maybe a January, February call for the next new low, if it makes it. So Ankit, you're exactly right. It's just a matter of how long it takes to get down there. Now look, we don't know for sure it's going to get down there, but if the pattern holds, which is what we do as technical traders, we're looking at a low of about 3,400. About 3,400, maybe 3,300 to the downside. As far as individual reports go, you can see crypto was bad across the board. Litecoin, which has been the strongest, gave it all back. And all the other things that had lagged, they didn't fall as much. There's really no reason at all to be buying crypto whatsoever here. When we take a look at foreign currencies, the first thing that stands out to me is the dollar. Now look, the dollar was up, but it wasn't up that much. With what happened to this week, I think the dollar would be much, much higher. The fact that it didn't go up tells me that it doesn't really want to go up. The dollar has been broken for a while. And remember back in the spring when the yen was broken, like great news would come out that should have moved yen up and the yen didn't move at all. And it just kept going lower for months and months and months. Well, take a look at the dollar chart. But this was a week of risk on, risk off. Take a look at what was risk on. It fell. Risk off, it did better. Does not surprise us whatsoever that that's where we are. So let's take a look at just the overall general market and get a nice call on where we are. We've got this at a -1. We took a look at the S&P. Here is the VT. This is the world index. It's also broken key levels. Broken these key levels. It is holding in stronger than the S&P. International markets are doing better than U.S. markets, but still, it's a nasty, nasty move on this. If we take a look at cryptos, we've been talking about them just being stuck in this range and not being, bullish at all. You can see we've now broken down and we are actually bearish on cryptos at this point, probably headed down to these levels somewhere in here. And ultimately, this could match up with the low that the market's likely to hit in late January, early February. This week, we had such a busy week this week. The next week is a little bit less busy, and we're going into the holiday season. So in the holiday season, things slow down. Volatility slows down. Well, I shouldn't say volatility. Volatility can slow down. Sometimes it does, but volumes slow down for sure. The amount of trades that happened during the last 2 weeks is not as much as the rest of the year. We do have one central bank left, Bank of Japan. I think you can sleep through that. They haven't made any changes in a long time. And then we have Canadian CPI. and Canadian GDP on Friday. And I think that's about it. Let's talk about market closures. Now, equity traders get lots of breaks in the year for holidays. There's only 2 times a year where the Forex market is closed. One is Christmas and one is New Year's. This year, they both fall on a Sunday. So the way it works is it's totally closed on Sunday and it's going to open up Monday when the Asian session opens. So it's really more of like a half day off this year. So jump online, check and see when those markets open up. But this is really the last week of real major trading. Let's jump into looking at currencies one by one to really build our currency board. Starting off with crypto, we've been very clear there's been nothing going on with crypto. There's been a very distinct downtrend for 2 months. That has not changed. As you can see, Bitcoin came up right up to the 50 and it got slapped down, and now we're looking to head back down, possibly to break 16,000. That is possible. That is major support on Bitcoin. We take a look at Ethereum, same thing. Been in a pretty solid downtrend other than just a few little moments, but this thing's just been heading lower. Sorry, this is Bitcoin Cash. Ultimately, $90. $90 is where the next major support level is. Next on to Ethereum, same thing, runs into the 50-day moving average, gets absolutely hammered. 1100 is the next major support on this thing. I'm calling for 800 on Ethereum by the end of January. And Litecoin, that was the star. Litecoin was the only one that was showing any sort of uptrending. That's done. That's done. We got the 20-period moving average starting to move lower. We're hitting this 50. The trend is done. You can't be bullish on anything in crypto at the moment. Let's jump into Forex because this is where the good trading has been. This is where the best trading has been. Dollar. This is a week that the dollar should have been the star. And you can see, other than one day, Thursday, it was down. It was down. It was weak this week. This should have been a week where it went higher. Everyone expecting the Fed to be more aggressive than expected. It didn't go higher. That is a sign to me that does want to go lower. So I'm just looking for rallies. I'm looking for dollar rallies to short. Right now, short term, the velocity score says it's not here right now. It's still showing more velocity to the upside than the downside. So this is going to be a trade later next week I'll be looking for. The yen is starting to show us that it actually wants to go higher. Ultimately, the yen has been pretty sideways over the last 4 months. However, this little pattern here that's been building, we poked our heads up above it, pulled back, bounced at a 20-period moving average, a really solid level. To me, this yen looks like it wants to go higher. And if we get a lot of weakness in the market, remember the dollar is out of favor. The money has to find a risk-off currency that it currently likes at the moment. 6 months ago, it was just the opposite. People wanted the dollar and they didn't want the yen. I feel like this period, people don't want the dollar and they do want the yen. What do you think about that call, Ankit?
You know, I would agree with that. I mean, this week was a great example. I mean, if you just look at last month, I mean, we've seen a dollar yen take a big tumble. And again, that was more news driven when we had a weaker CPI print. But I mean, take a look at this week. Dollar yen rallied, on Thursday. But then as we take a look at Friday, nothing changed. The market's still down. But then we actually saw the whole dollar yen almost gave back half of its move. That's not a good sign. I mean, we didn't see this at all in 2022. I mean, if the news happened, it just went one way. The dollar yen really didn't deter as much. But now the fact that dollar yen rallies, but then keep giving up half of its move rather than the other way around, I think that's not a good bullish sign. And as much as, we talk about the negative divergence there, but I think this week kind of showed it to me that the dollar yen actually doesn't want to go higher because this is a week where it should have gone up to 140 at least. But the fact that it almost hit 138 and just fallen back to 136.50, they're just telling me that this thing doesn't want to run higher, but actually wants to pull back. So maybe that will be the play for the next couple of weeks. But yeah, we're clearly noticing a lack of that consistency. Something where we talk about what should have happened, could have happened. We're not really seeing that. So I think maybe this is where we might need to adjust our gears because the same mentality or same way of thinking is no longer working right now.
But dollar yen has been an absolutely great trading vehicle. It's been the trade that I've been making probably 80% of the time over the last 2 weeks. It's been the best trade out there, and I think it's going to continue. Moving on to the Swiss franc, 0. Can't break out. So the fact that we can't break out says, you know what, I want to focus on currencies that are going somewhere. We just took a look at dollar and yen. They've been trending. This hasn't been trending, so we have to ignore it. Welcome to the party, Euro. Now, the Euro, we've been saying for really the last 2 months, just ignore it. It's not doing anything. It's not doing anything. We had a clear high base breakout on Thursday. So for the first time in a long time, I'm going to start looking at Euro trades. I think Euro trades are very, very likely to move higher. Here we have the pound. We talked about the pound. It did break out, but this breakout was about the lamest, weakest breakout you've ever seen. It took 10 days to break out and run a little bit and 2 days to give it all back. Okay. Technically speaking, this is an uptrend. Technically speaking, I have to be bullish on pound, but we talk about velocity. There's no velocity here. If the pound wants to show me like it wants to do something like the euro just did, I will definitely hop onto the pound bandwagon. But until we get some actual velocity, I don't want to play when it's doing this. I'm not interested. I want to really trade things that are moving in play. So if we go to the CAD has been in play for the last 2 months. This week, we based. All right, so look, we can't go down every single day. We know that when something trends, there's going to be bear rallies, there's going to be bases, there's going to be pauses in this downtrend. We all know that. We got a base back here. Boy, we really didn't get any bounces. So we had a big, big fall. We're likely to base for probably another week or so. The second it breaks below this base, I'm back in the short CAD bandwagon. The trend is very negative here, -3. But the velocity, we just don't have the velocity to justify a trade early on in the week. So this one's on the shelf until it can show me it's ready to break down out of this low base. The Aussie has been absolutely sideways. It's been one of these currencies that just hasn't been going anywhere. Range bound. Look at Friday's candle. We have to pay attention to that saying, ooh, this could mean the end of this consolidation. The Aussie that hasn't been all that exciting for a trade, we're now starting to see some trending. One more red candle on this, and this is going to jump to the top of my favorite short list because this thing looks really, really good momentum to the downside as well. I like Aussie short. And here we have Kiwi. Kiwi has been an absolute stellar performer. We've loved Kiwi for months. And you can see it runs up, bases, runs up, bases, runs up, pulls back. Look at today's candle. Now remember, today was a down day in the markets. And the Kiwi said, I don't care, I'm going up anyway. Look, it's a little tired. We don't have a ton of momentum at the moment. But Kiwi continues to be on the strong list. If we break them all down, what is the strongest? Kiwi's the strongest. We like yen the second strongest on a longer term trend. CAD is weak and Aussie is starting to really weaken. Those 4 currencies are very, very interesting to trade. Kiwi, yen on the long side. Let's talk about that because Kiwi is a risk on currency and yen is a risk off. So I think that's how you want to play it. When the equity markets are crashing, you want to be long yen. If they bounce, you want to be long Kiwi. In the short term, what we see as far as momentum goes, we still like the yen and the Kiwi both on the upside. And you can see on the downside, there's just not as much momentum right now on the downside. We have Swiss franc, pound, and Aussie showing a -2, dollar a -1. So again, there's nothing showing extreme velocity to the downside at this moment. We'll be, of course, updating these throughout the week. So really, I think the trade is Kiwi when it's risk on and Euro and Yen when it's risk off. And I think you play them against the CAD and the Aussie and the dollar when it starts to move. What do you think about those pairings, Ankit?
Yeah, absolutely. I think, I mean, it's funny as I take a look at the markets. I mean, nothing really has changed in the last month and a half. And this has been the most like, month and a half or two has been like very similar markets. I mean, no big twists and turns. So I think at this point it's better to just stick with what's working. I can't really tell you what's going to be the next big trade because again, like same thing hasn't really turned around. I mean, the CAD has been falling, the Kiwi's been rallying. Of course, these trades look extended, but they're the one that just continues to do. So maybe we'll have to kind of wait next couple of weeks. I mean, as we go into holiday trading, I don't think we have enough of that, the juice in the markets to really change things around. I mean, this was the week where we could have seen some big turnarounds, but we haven't seen a turnaround. So I think it's better to just stick with what's working till they stop working.
Let's start off with my favorite pairing, CAD Yen. We talked about how CAD has been low basing. And here we see it against the yen. It is a beautiful, beautiful, picture perfect low base. This should go in a textbook somewhere of, hey, what does a low base look like? It looks like this. I mean, this is just a perfect, perfect case. We had another low base that formed back here. And as soon as it broke down below its low, it broke down, rallied back up, hit its head against it, and then just plunged. Here we have another low base. To me, this is the best looking trade out there. The big question is, when does it break? And really, where's the trigger points? As you can see, we got to 99.30. 99.30 was these two long lower shadows. That's going to be the area I'm looking for. So for me, this next week, as I said earlier, I want to clarify this. If the markets are going up, I want to be long Kiwi. If the markets are going down, I want to be long yen. And I'll find something to pair it up against. And right now, the weakest is the CAD. If we don't break below 99.30, I'm still interested in this pairing because if it can rally up here into the 100.6 to 101 area, I will absolutely take a look at a short here on this one as it rallies up to the top end of the high base. These have been great little short-term shorting opportunities on CAD yen. Get short, put a stop up above it in case it does break out. This is my trade here for the next week. So CAD yen, I like it a lot on the downside if the market is weak. Now let's say the market is strong next week. The equity markets are strong. We have a risk-on move. Kiwi dollar. Kiwi dollar to me is the one I really want to focus on. And you can see that the Kiwi dollar has been in a little bit of a basing action as well. Not as clearly defined as CAD yen has been, but you can see when you take a look back, we've had, about a week of just sideways action here. To zoom in, I want to really hit some points here. You could take a look at 2 entry points. We could take a look back at this last high back here on the 4th of December. That was at about 64.42. I think that is a decent entry point. But with that entry point, you have to say 65 is likely the next resistance point. If you want to wait, then I think you're looking at about, whenever you get these long wicks, it's really tough to say where is the entry point. You can say it's at the top of the wick, it's at the top of the body. Look, just be consistent on what you choose. I always like to go at the top of the body, and that's 64.80. So if you want to have a little bit earlier entry, 64.40. If you want to wait for a little bit more confirmation, 64.80 on Kiwi dollar. These are the really 2 basic trades I have next week. Strong equities, long Kiwi dollar. Equities are weak. I'm going to be short CAD yen. Ankit, what are you looking at?
Hey, Rob. Well, I'm on the same boat here. I think, if you take a look at the yen crosses, Aussie yen as well, as we looked at the CAD yen, they look very similar in the sense that they are heading towards the bottom end of the range, and it seems like they want to break lower. So if you go on the daily chart, we can definitely see that instead of putting a pressure towards the upside, that they're trying to put the pressure towards the downside. So I mean, I think that looks very clear to me. But again, I think as we go into the next couple of weeks, again, you got to watch out for, okay, what's the next currency? What's the next big play? I mean, I know we look at the CAD, we look at the Kiwi. I mean, they look very extended. I mean, if we just go, Rob, if you want to pull them up on a daily chart, on a weekly chart, they're very overextended. So the question really is that at what point would they stop going down? I think I had this question early this week. If you take a look at if you want to take a look at Aussie the Kiwi basket, let's say, or the Canadian dollar basket, they're definitely on the daily chart. They're definitely getting in this upper end of these ranges. But if we take a look at in the history of times, we can hang around this level a little bit longer before we can really turn things around. We are going to head into some serious resistance, but the question is, what's the next big play here? I think the Kiwis really played out, unless I mean, this run that we had for the past 3 months without a breather is a spectacular run. So we'll have kind of wait and see like what will take place. We have seen this happen before, and I think maybe early January where we'll probably start to see things kind of shaken up here. I think the next big trade problem I'll be looking at is Euro Swiss franc. If you want to just pull that up here, I like the fact that this week Euro broke out and Swiss franc did not. And if that's the case, I mean, look at this trade that's building up and coiling up. I mean, this Euro Swiss franc was very similar to what Euro dollar did. They were all hitting below parity level. They kind of raised up. I mean, now we're sitting at Euro dollar at 106, but Euro Swiss franc was not able to recover at all. I mean, we are off the lows from 95, but sitting at 98 for, a whole month and a half. So this is a one trade that I will be paying attention to. If it does break above, again, 99.30, 99.40, I mean, if we can break above that, I think this has a very good chance to at least get above the parity and then go a little bit higher.
Let's wrap up the last currency room of 2022. The markets say they're going lower. The charts say they're going lower. You may feel like they're not going to go lower, and that's fine. You can feel the way you want to feel. But as far as a chart goes, if you are a pure technical trader, which you should be, then everything's broken. 50-day moving averages are broken. Trends are broken. Everything is broken. The market says it's likely to head lower. Over the next 2 weeks, you need to understand you have to focus even harder on playing currencies in play. During these last 2 weeks, what's going to happen is the regular business of Forex transactions, meaning companies moving monies around so they can build new factories and pay salaries, that really starts to decrease. So what happens is the only people left are traders. And the traders are like moths to flame, and they go to where the action is. So what happens is everyone piles into like 1 or 2 trades, and you can see some really nice moves while the rest of the market is just dead. You really got to focus on where are the traders going right now and jump into those trades. Those are going to be the best trades you can make for the next 2 months. As always, follow relative strength and weakness. Over the next 2 Fridays, we are not going to be doing the currency room because of the holidays. Check online for when the FX markets are closed. And we wish everyone a very, very happy holidays, Merry Christmas, Happy Hanukkah, happy everything to everybody out there. Thanks, everyone. Goodbye.